The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Chapman Tiger Technicians Hour, and of course, fourth in line here with that great lineup that we have. 7 o'clock, 7 to 8, 8 to 9, 9 to 10. Yep, fourth in the lineup. I remember today was Thursday. So, of course, we started with health and we went to the markets. Let me just tell you, the Dow is up 93 at 16,430. The S&P is at 1919, up 6.80. The comp index is up 14 at 45.90. Gold is up 12 at 11.53. Remember, we're talking about this for a while now. The commodities and the commodity index, all that needed was for gold to go to that leg D in the daily chart and then start a pullback. And if that pullback was strong, it should favor the commodities for the very first time as a reflexive action occurs. The mirror image of one instrument going up, the other instrument going down. Now, let's go through this. Silver is up 11 cents at 14.85. Platinum is up 20 at 900. Copper is up 3 at 2.12. Back in the twos is really good. Crude oil is up 85 cents at 33. And you've got bonds. Let me just do this because I need to look at the TLT. TLT is down only 6 cents at 127 in the 127.80s. This is going to be really interesting because you've got the dollar down 58 cents at 96.71. Now, let's do a couple of things here. The bearishness that I've been seeing right across the board, whether I read it, whether I hear it, whether I see it on any of the financial TV shows, and the technical analysis essentially has this as a counter trend bounce with a huge decline to come. And markets don't usually respond that well. What often happens is that as some of the biggest bears become bullish just on a short-term basis, that's when you get your deepest decline. And at the same time, when you're listening to ads on the radio and they start talking about the end of the world, it creates some kind of a cushion. And I have to reconcile charts. And I'm going to show you something here. I showed it to my subscribers on my opening call over the weekend. I send out just a dozen or more charts. Every weekend I try to get as much done as possible. You see this pattern here? This is the Dow. You see that arch formation from the October low of 15,855 of 2014? A huge arch formation that goes to the all-time high of 18,351, week of May the 22nd. Of 2015, and then a much sharper decline down to the August low of 15,370. Then there was a very powerful rally, but that rally only went to a peak B, and that stopped under 18,000. And then what we got was another sharp decline with one of the ugliest candles we've had, maybe ever, because look at the depth of that candle. And what happens is, with all that ferocious velocity, no, there has to be a technical term, turbocharged momentum to the downside, we don't break 15,370. In fact, on the 20th of January, it goes to 15,450 and then rallies very strongly. Now, that very strongly, in this particular chart, is at 16,466. We are 40 points below that now. But what's really interesting is that there is a case to be made. Now I've got this gull wing. Remember, here's the wing on your left side, the bird's right side. Here's the head, right? This is the body itself of the seagull. And then here's the potential for the right side. Now, everything about this chart, let me just move this away for a second because I want to do a little talking about something that's very important to my way of thinking. I'm going to go to the Dow monthly, and I'm going to show you something that is very interesting. If I can just, I'm using a different mouse. Oops, grabbed the wrong one. Grab the actual monthly chart. There it is. Look at these candles. I want to get rid of this. Give me a second. Get it out the way. Move it over here. Okay. You see the weekly chart? If you're looking at distribution, there's just no question that this very strong arch formation that goes from the February low of 15,340 in 2014, goes all the way up and then comes all the way back down, is talking about lower lows and lower highs right up until January the 20th. So that's the weekly chart. I have to put it into perspective. Now I can show you the monthly chart, and let me do this. I'm going to expand it. Now, one of the reasons on January the 20th, when we went long, one of the reasons why, very long actually, just the index itself, the Dow, one of the reasons I wanted to do that was because there was just a chance that we were imitating via the Vix Index, which didn't scream up into the 50s with that aberrational spike in August the 24th, which to me, it was completely wrong. It is one of the, yes, as someone said to me, are you trying to tell me that the price I see is not the price I see? Of course, the price you see is the price you see. But that's not the issue. The issue is, how was it made? What was the internal? What was the function? What was the creation of that? And to me, there was something decisively wrong. It should have been maximum of 32. I would even say 28 would have been very high. So doubling that is just crazy. All right. So now let's go back to candles. You see this, what we call I call Chapman wave Roman candle. What is a Chapman wave Roman candle? It's where the price opens, gives you a fractional little tiny wick. You've got to have that wick because, you know, when you light a candle, you have to have at least a tiny bit of wick. And then the price that it opens at, it just doesn't see that again, and it has a massive decline. It could even be intraday. It could be a 120-minute chart. It could be a 5 or 10-minute chart. It doesn't matter. The pattern's the same. And it plummets. But then all of a sudden, there's some buying. And that buying takes the price to close exactly at a halfway point or a little higher. If it's much, much higher, it's a different kind of candle like this one here, has a different connotation. In the end, it's sort of the same thing, but this particular chart suggests that you can go higher, especially if for 2 bars afterwards you close higher. It means that, yes, you'll come back and test the body, but you could still go higher. But this candle here has other implications. And then what happens? We have an inside Chapman wave Roman candle last month. Same characteristic. Here's what we need to talk about. I'll be right back. Basil Chapman, Dow's only up 70, S&P's up 3. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Just real quickly, I had a question about the SCO. The SCO is the inverse of the oil. The exact name is the ProShares Ultra Short Bloomberg Crude, and it is in leg C. But what I said to the person asking the question, I said, you've got to make sure, let me just actually do this, 2406, 26, yes, because there is limited action in the SCO. I just wanted to make sure that we were getting it right. And if you look at the XOI, as the inverse, it's on its way down, leg C, and this is in the move up, leg C to the upside. Okay, good. We're in agreement there. Let's get out of that. Nope. Move it over here. There you go. Okay, so where was I? Can't even remember. Let me just go back to move this away, move that away. Check my list here. Oh, we're looking at the Dow, of course. So many things happen. When I'm looking at this candle, and one of the things that is so fascinating to me, and one of the reasons why I want you to try as long as possible to keep a core of this position that we have in the Dow. Maybe we won't be able to. Well, one of the things that we've done for 4 or 5 sessions now is to try to buy the low of the day. And a lot of the time it's had a fantastic gain, and then it's given up the gain because the market has reversed from being up sharply to down, or down sharply to up. So this is exactly what's happening today. We had a fantastic rally, and now the Dow's only up 30. S&P's now gone negative to -2. And that's the reason why I'm saying keep our stops as tight as possible. We're looking at buying in areas that are different. This is not your usual lineup of stocks. We're looking at commodity sector and others. So let me go back to this and let me show you what I'm looking at. If there is trading that lasts for about a week into this body of the candle, the candle of August, and that would say I'm going to make it, I think I've said before, starting to trade under 16,000, not just a brief pullback, but starting to trade for a few days under 16,000. That sets up kind of a warning that says, uh-oh, be careful, because you're liable to test the low of that bar, which is 15,370. But closing above the high of that candle, which was 17,704.76, so 0476. Well, we closed on in November at 17,719.92. That, in essence, is a good sign. And what it says is that the low of 50,370 has some support in it because of the magnetic attraction of this incredible bar here. That was a bit of a surprise to everyone in October, where the Dow had a low of 16,000 and ran up to almost 17,800. So that's exactly what we saw with this candle. But we're not out of the woods by any means. And what I'm saying is that I don't know how high we can go. I do think we will make a leg D in the S&P and the Dow daily charts. For the Dow, it would be above 16,466, 1 point above, starts leg D. Wow, we almost did it today. Look, 16,485. No, wait a minute. Was today 16,485? So then that can't be the high. Oh, 16,510. I should know that. I wrote it in about 10 times over the last 3 days. So 16,510, you go to 16,511, and all of a sudden you've started your leg D up. That's where we've got to be somewhat cautious. Look, we haven't reached 80% in the stochastic daily, but the MACD is still acting pretty well, and the histogram is very positive, and we keep holding that 9-period moving average, and so far we're making higher lows and some higher highs, going to a C, a peak C. So all of that's good. Now, let's get back to this chart. I'm making it real clear. A few closes. What I mean by a few closes, I'd say over 4 days, over, say, a week. If 3 of those sessions are underneath 16,000, I will have to say, you know what? The MACD and stochastic in the monthly charts are so poor, you're just not going to be able to get that kind of strength. It's still so far below the 9-period moving average of 17,033. You're not going to find that strength unless the daily and weekly show signs of upside power that is strong enough to break out of this, to turn this into a V-shaped pattern low instead of this pattern right here, instead of this pattern right here in the Dow. And look at that beautiful cup formation that we're still holding so nicely in the Dow. Days young. You see that takeoff from the August 24th low? Look, fantastic. We'll go from 15,370 to 16,670, all in just a couple of days. Then you give it back and you turn that 16,000 into support, and it keeps bouncing off. It's like the Chapman wave restart, if anybody knows of my CD introducing the Chapman wave methodology. So this is a very important moment. I don't want to just throw in the towel and say, oh, no, because look what's happened. All of a sudden, you've got leadership out of the blue. We spoke about it when Scott called yesterday. I said, let's look at United States steel. Look at the move in steel today, up 11%, 10%. At 0.80, at 832 from yesterday's trading in the 7s. It's now in the mid 8s. It hit 868 this morning. Remember Alcoa that we were talking about? Poor old Alcoa, up 9.5%. So something is happening here that is very different. Let me go back to the candles, because I'm trying. This is going to be Technical Friday should be tomorrow, but it's really important to show why you keep getting these sell-offs, and then you're getting buy programs come in. If this is really bearish action, the Volatility Index, remember that spike in the reversal yesterday in the Volatility Index? Look at that. That's not a good sign unless the Volatility Index starts to trade at 2450 for about 3 hours, three 120-minute bars, and then all of a sudden you're looking at the chances you go up to the top. I don't think so. I think tomorrow we could close below the 9-period moving average in the daily chart of the Vix Index. That's my thinking. And I keep seeing this, and I keep thinking that there are fund managers out there that are just having a ball getting into positions. I mean, look at those gold stocks. Look at the commodity stocks. We had potash. It had a fantastic move, and then it gave it back, and we made a little bit of money. I tried to get back in, couldn't get back in. It's up 48 cents today, up to almost 3%. Something is going on that's different, and therefore, the dollar rallying, before I was saying dollar rallying, you should see the market rallying, because they have gone together. And then I said, wait a minute, I've got to get away from that. There is no causal effect here. They are, in a way, they're separate instruments. So I try to separate myself now from the dollar. Dollar gave a very sharp pullback for 2 days, and gold has responded positively. So it says to me that maybe, and we are seeing that in one of the selections that I had for my subscribers this morning. I had it on, and then I thought, I don't want to get too carried away here. This is a very choppy market. I don't want to get in and out, in and out. So I stepped back a little bit. But the 2 picks that I wanted, actually there were 3 picks that I had as buys last night. I just said, buy them at the opening, buy them. And then I said, are you crazy? How can you have 3 or 4 brand new buys when you're in this kind of market? Each one of those is up sharply today. What can I say? There's something going on here. I'm going to go back to the candle to explain what I think I'm looking at. I'll be back. Basil Chapman, Tiger Technicians Hour. Exciting day. Now we're up 56. S&P's up 1.5. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So now let's go back to the Dow. You see this Chapman Wave Roman candle right here. Why do I call it Chapman Wave Roman candle? Because that's this one here, right here. Because this is a pattern that I spent years and years studying. I never ever saw it in Nissen's book. I haven't really updated it, but I've never seen Nissen talk about Steve Nissen. He's the father of the candlestick charting here in the United States. And I always love when you go to the shows like the New York show coming up. You go to the shows and Steve Nissen has this thing, and he has these DVDs and he has all this stuff. Boy, he's really managed to market the candlesticks, but they are fabulous. They tell you a lot. So this is the thinking. I'm making it real simple. A few closes within a week under 16,000, and I have no choice but to say, uh-oh, good chance we're going to test the 15,450 low that was made on January the 20th. Just make it real simple. At the same time, if all these selling sprees that you see right now are really within a containment area, essentially usurping up the energy, usurping all this very needed energy to go higher, but essentially creating a base of support above Dow 16,000, what you will see, and now I am way more comfortable than ever talking about the Dow as a leading indicator because of the mix of the Dow. Look, right now it's up 0.13, the S&P is down 0.14. I think that the Dow makeup at this particular point is giving a tremendous amount of information. Just the whole, the characterization. You've got two banks. It's very interesting. You've got three actually in the credit card business, not exactly always directly American Express, MasterCard, and Visa, so they have different formulas, but let's call it in that area. But then you've got two oils, and look, the oils right now, look, XOM, nice pattern. It's in leg C to the upside, is 78.68, and if you want to go to XOM, what's the other one? Chevron, CVX, Chevron right now. Okay, it's not great, but it's holding, and that's really the issue here. Then you've got all these others, and you've got the higher tech, you've got everything that you want. Defensive, the works. You've got pharmaceuticals. Look, there's Merck. Merck was struggling, still struggling, made a fantastic run up to the very beginning of 2015, all-time highs in the 62s. Beautiful. And now it needs a well-deserved rest. There's the Roman candle, and it's starting to fill it. This says to me Merck should be on its way down to test the 45.69 area. So, okay. So I'm done with that. Let's go to Brent and Martinez. Brent, how are you?
I'm doing very well, Basil. How are you today?
I'm well, thank you.
Good. I had two other stocks that I bought in that January bottom.
Yes.
One was Freeport McMoran at 380.
FCX at what price?
$3.80, and then I bought.
Oh my goodness! And it's at 579.
Yeah, Alcoa at 680.
And
so
Alcoa at 680.
Yeah. My question was in regards to, they both have very similar patterns.
Yes.
They're kind of ascending rectangles that they both broke out of today. I just wanted to get your opinion on what you thought the implications of that would be.
At this particular point, I have to consider that this is something I was going to mention when I was talking about the candles. I'm going to mention it now. Whenever there is a rotation in the market, it is really important to identify the most beaten down sectors. Are they rallying? And if they are rallying, what has been the history of rallies in that particular sector? Is there a certain characteristic that says, until such and such happens, is just ho-hum another one of those balances that fails? So that's the question right now. This is the first time that I can go to Alcoa, I can go to FCX, which is Freeport McMoran Copper and Mine in that sector. I can look at the other one you mentioned was?
Oh, just Alcoa and Freeport McMoran. I have a lot of others, but those are the two.
Oh, the other one I was going to mention, I can't even remember. It's such a long day already this morning. If I mentioned U.S. Steel, yes. U.S. Steel is up at 817, same characteristic. So this is what I'm thinking. And this is, the light went on over the weekend as I started to think more and more about what we're looking at here. It seems to me that as long as you've got sectors that can take the place of other sectors that had been the hot spot for 1 year, 2 years, even 3 years in some cases, some even 4 years before they started to use 250 last year as a major top, and they kept probing the upside to go high, and they couldn't, and therefore they've turned. There's an expression that I don't know who coined the expression, but I've always loved it from the time I first heard it, and that is probing for a bottom. And this probing for a bottom is really important because you can see, I'll go back to Alcoa, you can see that in the weekly chart, back when it hit 797 in August of 2015 in the weekly chart, it had a very strong run to $11.18. Now that percentage-wise is huge. Not if you talk about Alcoa as a $17, $18 stock, then it's just a bounce. But as a percentage gain from a low, then what does it do? It gives it back in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. In 11 weeks, it gives it up. It goes to a lower low, just slightly, but 781. Then it rallies another big percentage move to 1027. But it's making lower lows and lower highs. And that goes on for 1, 2, 3, 4, 5, 6, 7, 8, 9, a shorter time span. And now you've got a reversal from the low of $6 and what did I say it was 14 cents to $8.25 right now, testing the 9-period exponential moving average just as the others did before. So the big question now is, has Alcoa made a low of substance that can be thought of as an intermediate term? I'm not going to go long term. I'm just saying intermediate term for me, intermediate term on a weekly basis would be going 6 weeks to 2 months on the upside. I think that's, you'd love that, right?
Oh, absolutely, Basil.
So here's my answer to you. Alcoa needs to close tomorrow above $7.81. It looks like it could, but you never know. And then the following week, that's next week, which could be a tough week in the market, you've got to see a push into the middle of the candle of 4 weeks ago. You've got to see it go into about the $9.20 to $9.40 area. If it's able to do that and then close a week from Friday anywhere above, I'd say 875, I think Alcoa has the chance then to go for at least another 3 weeks. I can't go further than that, but at least another 3 weeks, turning the $7.30 to $7 area into some kind of a base. And that would apply pretty much to Freeport-McMoRan, and it would imply to U.S. Steel, any of these that have come off the low. They've got to close nicely above the most recent weekly low and then move to the middle of the bar that they were in before. Hope that helps you, Brent.
It does very much. Thank you, Basil. Have a great day, okay?
Thank you very much for calling. Always appreciate it. Good trade.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. I was asked about the TBT, which is the inversion, the ultra-short Lehman 20-year Treasury bond fund. It's the short side, whereas the TLT is the long side. But before I do that, there's an article in the Boston Globe today by Jeffrey Fisher. He's an economist, used to live right here in Newton, Massachusetts. I'd seen him periodically. I'd listened to him quite a bit. And I always thought he was a very good analyst, but somehow or other, I always felt that his conclusions were based on his emotions, and his emotions were very liberal. And therefore, he took some really good analysis. And at the last moment, this is my thinking, of course. I'm not an economist. He's the expert. So I'm just doing it in relation to my own, my contentions. And so I thought, okay, I'd like to read it. And it's all about a sluggish economy and stuff like that. I'll get into a little bit more tomorrow. But what I really wanted to mention was he gave some really good insights into growth, etc. So I don't want to take time now to talk about it. But what I will say is that in conclusion, he then skips something, talks about government, and I thought he was talking about government saying what I was expecting, but instead what he said is he gave it a different slant and never even once mentioned the government. The job growth has really been in large part to government expanding, and he never mentioned that once. I want to get into it. I'll get into it tomorrow, and it was very disappointing. I thought, once again, he's got a very good series of analyses, but his conclusion, I thought, was just missed the point completely. But at the same time, it's worth talking a little bit about. So if tomorrow I remember to do it, I'll take a moment. Now, I just 2 questions. One is a TBT. Remember, this is the one. This looks like a staple on its side. I wish there was a little. I wish I had a letter under text. I wish I could put the staple on its side. Because look, here it is. There's a left shoulder, the head, the right shoulder, and head and shoulders pattern looks like a staple on the side. If the TBT breaks under 37, closes under 37, rates are going to go even lower because the TLT is going to go higher. But in this very short term, we've got a left side, right side price time match. And my thinking here is that the TBT, because of what we're seeing in the commodities, there's just a pretty good chance. And that, I think, is going to tell us a lot about the duration of the commodity rally and the duration of the dollar decline. So I'm watching this real closely. But as I said before, yesterday when I was talking about it, I said the TBT needs to close about 39.50 and attempt to go quickly through the 39s into the 40 area. Then you're going to see the TLT pull back sharply, obviously, because it's making that pattern that says MACD is still very good, stochastic's at 83%, but a slide under, it's at 128.38 and 43 cents. A slide underneath 126s into the 125.70s would start to indicate that on a shorter term basis, bonds could be pulling back, yields could go higher, and we will make a peak C then next week in the weekly chart. I still expect that we could try for a D because the stochastic's very strong in the MACD. So it's just a short term pullback. How it affects these other indices and how it affects the commodities, I'm not yet sure, because I had a question about the dollar. I believe it's about the dollar. I don't know. DX-_F. I'm not sure if that's it. I get it a different way. Dollar DXY is the actual, that's the vehicle that I use. And it's gone under the 200 period simple moving average, under the 200 period, sitting right on the 200 period exponential moving average. The MACD and stochastic are very poor. The dollar suggests very strongly that yes, it could find a little bit of support here, but if I extend this out like I should to there and then add it to the right side, you'll see something very interesting. Call this green, and then we do it again and we call it pink. New parallel, make it pink. There we go. Make it a dashed pink. I just like that because it allows me to visually see it. And there we are. Bam. Right there. We're one day early in taking out that support level. What's the support level? It's a support level of 96.46. Today's low is 96.62. So now this is going to be very interesting because the dollar suggests that it's got an A to B all the way up to a peak D equals C to D to the downside. So this is going to be a really important area, and we're looking at this weekly chart that says possibly a peak F, not a C, but a peak F. And if that's the case, you'll be going under 96. If the dollar goes under 96, believe me, the gold should rally even more. And let's just look at this gold chart again. Look at the gold chart. Whoa! And this is a parabolic move almost to a leg E. Wow. How's our little gold stock doing there? Oh, it's up nicely. Good. And look, this is just... Now, how do I use trend lines? Channel lines and trend lines. Remember, trend line is just one line based on highs and lows of a particular instrument that you're following. But a channel is where you've taken it and just made it very clear that there's a parallel movement. Remember, a channel is two parallel lines. A parallel movement, in this case, the inside, Chapman wave inside buy signal came right in there, and you got the bounce to the upside. And now gold is just about to test the area of the decline that I've got, which would say 1164 on the continuous contract, 10 points higher is where you should see a bit of resistance, and that's where we might get a peak B with maybe 2-3 days of a pullback, and then move to the upside. If in fact gold chart on a weekly basis spirals through 1191 into the 1200s, that could be a Chapman wave cup and ladle breakout, and very positive, and suggests you have to wait all the way until it gets to a peak D before it's going to come back and retest that high of 1191. So one step at a time. In the meantime, gold is looking very good. I had a question. Surely gold acting so well and the XLF, the banks acting so poorly, is telling us about something really awful coming along. You know, I think that I cannot disagree with that thinking, but I don't think so. I think, at least for now, I wouldn't be surprised if the banks are just holding okay. They're not doing great, but they're holding okay. I don't think the crisis is going to come until later in the year. That's my thinking. We'll see. So that's the XLF trading at 21.15. Then there was another question just before we go to the break. Okay, here's something else. I was asked about my Dow quartet. So GE, spectacular move, coming off the 27.48, going to the 29 high today of 29.46. It's also telling us that this is a good sign for the market so far, but it's a very quick A to B to C. So we're going to be watching this closely. I'm still very upset. This almost has the dollar look in the weekly chart. Goes to an E, then plop, pulls back sharply. Can General Electric get back to 31.49? It's up 53 cents right now at 29.20. That's going to be the issue. The monthly chart is still outstanding. So this is a big question for me. So GE acting well on the daily. Weekly's little suspect. IBM acting well on the daily leg. C as well. Having completely filled the gap, most recent gap, made 118 round number low. The weekly and monthly charts are just terrible. I'll get something to drink here, a little tea, and I'll be right back with you. Basil Chapman, Tide Technicians out, Dow's down 10.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
We're back. Let me just finish this 10-minute chart. Needs a rally at 1903 on the E-minis. Needs a rally back above this little candle right here of 1907.75. That would be positive, and that would suggest that you could have a little bit of a rally into the afternoon session. But a breakdown from here would not be good. Okay. So let me see. Oh, KBE. I was asked about KBE. You know, it's acting okay, but it's really not all that good. Monthly chart so far is from last month's candle. Hasn't had much of a bounce at all. This is a very important point that SPDR, S&P, Bank ETF, this is more the regionals. It is the regionals. You need to see this at 28.98. By the end of next week, it has to be tackling the 30s, because if it's not, this is not a good sign at all for this particular index. That's that. Wasn't there another question there? Oh, the question about oil. Yes, there has been a relationship with oil and the S&P for about the past few weeks. It's we're when oil has suddenly turned around to the upside, you've had a much nicer move on the upside with the S&P. There's a relationship. I'm not sure if it's directly correlated to the big multinational oil companies like Chevron, Exxon, but there has been that kind of relationship, number one. Number two, question about natural gas. As I recall, UFCC crude oil has rallied a little bit, but UNG, the United States Natural Gas Fund, is at down 26 cents at 7.29, and it's got that H pattern in the weekly chart. It better not close decisively below 69.1. 6.91. That will be very negative. So I can't see anything yet that says it's going to have a sustained rally. And if you look at the USO, keep your eye. This is daily, weekly, monthly. Keep your eye on the same patterns. Here we go. And now you've got crude oil is down 20 cents at 9.14. You know what? They're not too different, these patterns, except that the weekly crude oil is a little bit better. I think crude oil, I still think that there's a glut, number one. Number two is, I think that crude oil it has the potential for a bounce, but if you're looking at, now I don't want to make absolute comparisons, but the SCO, which is this is the Bloomberg Ultra Short crude ETN, I believe it is. As far as I can tell, yes, it should still make a leg D to the upside, and that would say that at some point crude oil will be coming down even more. So I would treat crude oil just as it hasn't got the same excitement as gold. The gold stocks are on fire. There's no question about this. Look at this, ASA, one of my favorites. We don't have this one. Should have this one. It's at 8.55. It's up just 5.3% today alone. Had a low just 2 weeks ago of 6.56, and now it's 2 points higher. 28-30% again is really amazing. So now let's look. I had a quick question about the IYT. Whoops, we're going to break in a moment. And this is in leg D. This is the transportation index, a very quick ABCD that very often says you better break very sharp to the upside to extend leg D. Otherwise, you can have a bit of a pullback because these very quicks, peak A to peak B to peak C to peak D, use up a lot of energy, especially if they don't go very far. So let's just do this. We'll go back to the Vix Index. The Volatility Index trading at 22.18. If there's a decent rally later today, oh, Ben, I'm sorry, Ben, I didn't see you until right now. I don't know if you're able to call tomorrow, but Ben, call me tomorrow if you can. Sorry, we've run out of time. Let me just do this. The Vix Index is trading at 22.14, right on the 9-period moving average. By the end of the day, if the Vix is up at the 22.30s or higher, 22.30, 22.40, this market is going to be pulling back way sharper. But if for some reason there's enough buying pressure to see the VIX go to 21.70 towards 3 o'clock, there'll be a burst of energy into the close. I'm not sure if the market's ready for a burst of energy again today, but I got a feeling that there will be a little bit more of an upside bias this afternoon. So with that, I'm saying fare thee well. I will see you tomorrow for Technical Friday. Sorry, Ben, I just didn't see your name until a few moments ago. Call me again tomorrow and we'll talk about the Dow. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,